Hi everyone, it's Logan, also known as the Don from Infinite Money Trading. We're going to go over how to use the unrefusables, which is all of my picks and charts that I put out, and how to specifically read the charts. And so just starting with the Discord, under my channel, DonLogs Unrefusables, you get my commentary, and you get the watch list and charts. So this is one way to open up the charts. Just click on it, you can click the link, get a larger view in TradingView, and beyond that, you can also open up the Google Sheet and take a look at the tickers. It's a little bit easier to access in here, I know. Just click on the link and you'll be able to open up the actual chart. And also for updates, you get these comments here, and you can get an update on an entry and exit, those sort of things. And so what we're going to do is jump into the charts. I'm going to explain support, resistance, trend lines, how to read the chart, what is a pattern duration, what does the target mean, what is velocity, and so let's jump into that. All right, starting with the picture of the chart, the link that you all see, this is what you're getting. Now the size of the chart is going to depend usually on the trend that I want you to see, the pattern, and also some supply. So usually it's cut off right here, but there's some supply here I wanted to show you. Let's start breaking down the different lines, the colors, and the different content here. Starting with the date, this is the date that this is charted, and also the date of the breakout. So if you take a look, price broke out of the pattern here. So the pattern are these yellow trend lines. So these two converging trend lines is your pattern. These white lines are your inbound trend. So this is the trend that price was on before the pattern. So this is a continuation wedge. So what happened? Well, price was in a channel on a trend, and then a pattern started to develop and it wedged out of that pattern. But now that we've broken out of the trend, or out of this pattern, we're going to see this trend continue. So that's what these are. So white is inbound, yellow is the pattern. Target price. Target price is where I believe price is going to go. Pattern duration is not only how long the pattern was, but how long I believe it's going to take for the target price to be reached. So in 17 days, I'm predicting that price will be up here at 1050 to 1090. So I give a little bit of a range. And so how do I come to those numbers? We'll take a look at the inbound trend. It's about 31 days here. And what I'm looking at is the angle of the trend and the velocity that price has within that trend, and breaking out what the velocity is going to be to continue that trend. So it depends on every pattern. They're not all the same. But if we take a look and just break it down and simplify it to what velocity is and how to, how price moves, that's how quickly price is going to move a certain direction. Velocity is volume, but it's volume on one side of the equation. And so this is a bullish chart, so it's going to be more buyers, right? And so if you just think about economics and how price becomes what it is with buyers and sellers, velocity is more of that volume being on one side. So that would be volume on the bids. So if there's 20,000 bids, so bids are the buyers, asks are the sellers. If there's 20,000 bids and only 1,000 asks, what's that going to do? Well, that's going to make price increase with velocity. And so that's how I get to my target price, and it's usually based off of this inbound trend. Or if the price is coming with a reversal, then it's going to be the opposite of that bottoming trend. And so we'll take a look at that next. Red lines, these red horizontal lines, and the green horizontal lines are supply. So red is resistance, that's where sellers are. Green is support, that is where buyers are. This is where price converges and reacts. So if you take a look, these lines that I have on these charts come from wick touches, because that's where price is converging. Take a look at how these wicks touch this line. Same here. See how wicks come down and touch these lines? It's very important to understand that concept, and it's not something that you could just automatically get. You have to actually search for them and find them, but you will see that price reacts to those. And so what we're looking at here, the next step would be that price is going to get rejected here at resistance, and it could come back down here to support and get bought up again. Specifically in this chart, what we're looking for is, now that it's very bullish, we're looking for it to break through resistance and then continue in this trend. Now, it's not just resistance and support, these horizontal lines that act as that. Trend lines also act as support and resistance. So take a look at this trend line here. This acted as resistance. Down here, it acted as support. See how price bounced on this support? So this trend line here and this trend line here, take a look. This trend line acted as support. This trend line acted as resistance, got rejected, right? And so these are very important things to understand, and that's how you actually use my charts. Support is your entry. You're buying on support. You're selling at resistance. If you follow those rules, you will make money. And so that's where the rules come from, and that's how you use the chart. This chart is a little bit of a longer pattern, and so you can see instead of it being a continuation, it's actually a bottom. And so what this means is that price is going to have a velocity opposite to this trend. So this was a downtrend, price consolidated, and now we're breaking out. And so what we're looking for is this trend to now be transposed this way on a similar angle in velocity. And so again, what are you doing? You're buying at support, selling at resistance. And that's a simplification, but what you're really trying to do here is just buy when the buyers are buying and sell when the sellers are selling. And so for instance, if over here you buy at support, if price moves through resistance with velocity, you don't need to sell. You're selling if price reverses. Now how do you see that? Well, it's something that you have to get used to see that price is actually reversing. Same with if price is bouncing on support. But by having this information here and actually having these lines drawn on your chart, it's going to make it a little bit easier. And you're not just watching open space. If price is up here and it's bouncing around, you don't know why it's moving. This is how price moves. And so this is a little bit of a longer pattern. So you're going to see a little bit less volatility, that sort of thing. And so it always depends. It's going to vary, and it's important to see, in terms of a duration as well. You're going to get a different velocity. And so if something's 6 days, like a flag is going to move with a lot more velocity. It's a short-term pattern. This here, well, we have a bottom, right? So this is for right now. If you're watching this video later, right now we're seeing laggers, which is, sector-wide bottom out. This is a bottom. Price is now looking to start to come up here. And so take a look at this range. So on charts, if there's a lot of supply, you're going to see price move a little bit slower through those because it's got to get through the sellers. But take a look at these two levels here of resistance and supply. If price gets in here, it's going to move very quickly. You're going to see a lot of velocity. Take a look over here. See how fast price moved through here? That's because there was no support in here. But down here, take a look. There's support. So there's buyers and sellers, and so price is moving through there. And so that's how the charts work. In terms of this up here, that's your technical analysis. So these are different TA indicators and oscillators that I'm picking out that I think is a reflection of what we're looking at. So they're lagging indicators, but they are things that are going to help establish a confirmation of what we're seeing. And so for instance, 824, you had a Williams %R, a MACD, were bullish indications. If you don't know what these are, you can look in the education section. Same with if you don't know what the patterns are. They have GIFs that show them exactly what they are and write-ups which will describe what these are. So triple moving average crossover, a 4-day, 9-day, 18-day. That means you had moving averages crossing each other. Short term, no sure thing. Again, these are all confirmations, lagging confirmations because they're multiple price bars back, but they also help set the stage for the bias. And so if I have a lot of bullish technicals and also the price is looking bullish, then those are two confirmations, and that's what I'm looking for. All right, now let's go over how to actually use these charts to actively trade. The best way to do this is to copy these lines. Get the resistance lines, get the supply in there. You don't need to copy, the inbound trend if it's not, relative to where price is. If it's, these lines are not going to act as support and resistance because we're already past it. If you have trend lines that are above price, below price, then you're going to want to copy those. And you can just refer back to the chart and try to use those as an eyeball. Let's go over the examples of how we would actively trade this. So here's price at 661. We're really looking for a pullback down to support here for an entry. So we're looking for a bounce on support, right? So let's just take a look at that. If price opened here, next trading day and comes down, tests the level, and then it bounces with velocity. So when I talk about velocity again, when we get down to this level, if it's getting bought up, price is going to reverse. As soon as we see that, then we can enter a position. And so here we are. We just bought down here. So it tested the level and it successfully bounced. So we bought in. Now we're holding until the next level, which is up here at 675. So this is resistance. When price is approaching this level, what we're looking for is velocity through the level. If price gets to this point and it becomes all sellers, which is usually the case at resistance, then we would take profit at this point. So take a look. We bought down here at support. Price reversed because of all the buyers. Came up with velocity. There's no other, levels in here. And then price reached resistance, but it started getting sold. And so it's getting rejected at resistance. Then we take profit. Now, the other option would be that when price is approaching here, you can look at it. I like to use the daily, but if you're looking at this on, let's say, a 15-minute, you can see price start to get bought through the level. It's something that you're just going to get used to seeing. And so here we are, we bounce. Price is moving through with velocity. So we held through. We didn't need to sell because price didn't start reversing. So here we are up here now. What's generally going to happen is when you pass a level of resistance, it's going to pull back down and test it as support. So as soon as price passes a level, it turns into whatever that's going to be. So if price passed support down here, it would be resistance now. Now that price is above resistance, it's support. So now we have support here. That's buyers. So generally what you're going to see is price pass resistance, and then it's going to come back down. It's going to pull back into that support. It's going to test it. Price wants to go where the supply is, and so there's a lot of buyers down there now, right? And so when price pulls back in here, if it reverses, so you now get a bounce, you're going to continue to hold. Or if you didn't enter this position already, it's the same as down here. This is your next entries. So price is going to break out and then pull back, always, in terms of a consolidation or anything, even if it's just one price bar. And so here we are now. Let's say we're still holding from here. Price didn't break down, so we held. If price broke, let me move this one. If price broke through the support, then we would take profit because it did not hold this support. But let's go with the example of price bounced, held support. Okay, now we have 705 as our next level of resistance. This is where the sellers are. So all the buyers were here. We made the price continue. Same thing applies. Okay, we reach resistance. What's going to happen here? Well, if velocity moves through resistance, now this is support. If price comes here, so we're still holding. Velocity is going down because people are selling. We would take profit right here as soon as it bounces with velocity. You're going to see it. You're going to see all the volume turn into sellers. That's how you see this. That's velocity. Let's say that price, our case here is that it's bullish and it's going to continue to break through these levels. Price breaks through. This is now support. It's no longer resistance. It's going to act as support. Now, it doesn't always pull back. Sometimes price is going to continue to move through. When would that happen? We'll take a look at this chart just like we looked earlier. See how we had supply here? We had to work through it, right? Price will generally pull back. When price enters, make this look better. When price enters, look at this. See this entire open area here? Well, price sees it too, and all the traders see it. The next level of supply where sellers are is up here at 1012. Let's take a look. Here, that's over 40%. That's a pretty big area, right? In terms of price. What's going to happen when price breaks through this resistance? It's going to get pretty bullish pretty fast. There are no sellers in here. So that's something that it's very important to wrap your head around, is that down here you have sellers and buyers. But when you get up here, so take a look how price moves so quickly up here. There's no sellers in there. This only turned because of the overextension of the market. Once we get in here now, this is just going to be up. That's just how it's going to work. You're going to get pullbacks. So you are going to get pullbacks, and it's going to start to create a new level of support in here. So it could be, you're looking for wick touches. Maybe it's this one. Maybe it's here. Up here, I have 2 wick touches. So probably what I'm looking at and what I'm looking for is a new level of support to get in here. So price is going to pass it. It's going to pull back. And it might test that a few times. What you actually might see is something like this. And price tests that level. You might get a new pattern in here. And that's how new levels are established. And so same thing applies when we get up here. If there's sellers here and price reverses, we take profit. And so that's how you use the chart. And it'll be the same with down here at support. If we had the exact same example, if price broke through, we get rid of this. If price broke through, you would sell. And this would become resistance. And now you have a new story. Now this trend line here could act as support. And so if price comes down, bounces, that would be your entry. Now, this isn't really the play we're looking for, but that can definitely happen. And that would be the exact same case. Trend lines act as support and resistance as well. And so we could take a look on that chart that we saw before of sand. What we're looking for here is, let's say price goes ahead, climbs on top of resistance, turns it into support, pulls back, bounces. Well, this trend line right here that we were looking at of the channel, that acts as resistance. And so when we get there, we're looking for velocity through, but if it pulls back, we take profit until it climbs back inside here and turns it to support. So take a look. If price breaks through here, this trend line is now support. You're going to see a bounce in there. You're going to see movement through this channel. Your next level of resistance on this chart, there is some local levels you could find, but it's not as strong as these levels. Your next level of resistance is up here, this trend line. And so once you get into channels, especially, you're going to see a lot of movement. Take a look at the price bars in here. They're big candles. You're going to see this, occur if there's not supply around. And so until new levels of supply, supply just being, buyers or sellers, usually supply we're looking at as sellers, but just in general, if new support and resistance is going to be created by price movement. But when you're in open territory, there's going to be a lot of velocity on one side, because that's how it works. Buyers and sellers create the price. It's just economics. That's definitely something to take a look at. This is all just economics. I'm an economics kind of guy. That's what I base everything off of, and that's all price is. And so these are the things to look for. These lines are where they are because of a reason. Price is converging at those levels. You have buyers at one level, sellers at another. That's how to use the chart. Learn to read the chart. Learn to find these on your own. For now, just pattern recognize what I'm posting. There's a lot of charts up, and you can start to see patterns emerge between each of them. Look for those, and then start to be able to understand them on your own level, and understand that you're buying at support, selling at resistance. That is my rule. This method of simplifying markets, which are very complex, into just a few different ideas, and then only one rule. It's two rules, but it's just one rule together, is buy at support and sell at resistance. That's all it takes. If you follow the rule and have no emotion and only use that, you will make money. Don't take profit because price is moving up quickly. If there's no resistance, then you're not taking profit until price reverses. So keep those rules in mind. Hope this helps with understanding the charts. And as always, I'll see you in chat.